What's up, Track Nation? This is Careful from Liquid Ritual. In this mix, we'll be taking you on a journey through the hardwave genre, showcasing some of the best hardwave artists the scene and Liquid Ritual has to offer. Enjoy, and let us know what you think in the comments down below.
Sound a little better now. So let's chart some China while we get some people, and then we'll get to the good stuff. Got a whole China watch list here. Baba. Baba looks interesting. Mainly because of their counterpart. So Baba in I don't know what trades you're referring to, Gerwinder. That looks interesting overseas though. Broke a downtrend recently. Still has this major downtrend. Look on the daily. Got some key levels marked out here. See a key zone here. If I can get back over 175, that's when I think it can really start to do some damage. Music's still a little loud. Hello, Fear. I think Sunday Night Football's killing my attendance. Hello, Maddie. Music a little better now. Halftime. Yeah. So this one is one of China that I like. BEKE. There's some. This is a holding company that operates online and offline platform for housing transactions. I have a feeling it's slightly affected by Evergrande, so that's probably why you've been seeing the huge sell-off lately. Have to keep an eye on their next earnings report and see how they do. But in terms of annual balance sheet, you can see revenue 4 years ago was $4.5 billion, all the way up to $16 billion this year. So really strong growth, 400% growth over the last 5 years. We would like to see earnings a little bit better, but price to earnings is probably fairly valued where it's at. The big thing though is I'm just looking at this downtrend right here. I'm not in most anymore. That thing has exceeded all expectations. I've been staying away from meme stocks the last 2 weeks. They went really well about a month ago, and they've kind of been getting hammered since, but I do always have them on watch. So, this one is one that I'm watching. Baidu, this is one that I really like. Broke a downtrend on the daily and then has continued. I think this has a strong push to 170, 172 this week. Yeah, this thing was on the newsletter and just, exceeded all expectations. It had the pullback when anticipated, but the first push was a lot bigger than I anticipated, and then the second push was a lot bigger. So, now at this point it's at resistance. You can see there's strong resistance here. So I do expect a pullback, most likely to start the week. Probably retest 38, and then if it bounces at 38, that would be a good entry to go long. But there's really nothing wrong with it. Earnings have been going great. I expect them to continue to go great. I think a strong push towards the 50s is next, but I would like to see a pullback before I got in. I feel like I need some relaxing music. Yeah, most was great. It was one of the best plays we've had recently. Billy's one that's interesting. Believe they do online branding. Big thing, with their video content and video game content is China banned video game, I think, usage down to like 3 hours a week or something for kids. Like, they're trying to moderate that. So this has been getting hammered lately. I still think it's a great platform that makes a lot of money, but I'd like to see it get over these green lines here. Probably over 75 to go long on Billy, but I know this one is popular among hedge funds, so over 75, 76, maybe we can start seeing a gap fill up to this 100 mark. This is an OTC stock, BYDDF. It's a pure play EV stock for buses and electric transportation for the public sector. So if you like OTC and you like China EV, you like the idea of it, this is probably your best stock to go long on there. And that's BYDDF. Dada. Dada. I'm not familiar with all of these, but did a lot of research, and this seems to be the biggest China stocks that are publicly traded on the New York Stock Exchange. You know, this is a retail and delivery company. Kind of looks like a DoorDash type business over in China. Again, a lot of these just have long downtrends, and then they have these consolidation periods that they're looking at down here. So we're just looking to see these break these downtrends here, and then get over the consolidation zones. DD, obviously ride-share hailing, kind of like the Uber of China. Got annihilated with restrictions from the Chinese government, and hasn't been investable since. But if you're using the bodies of the wick or of the candles, it did just break those. You know, this has been one that the hedge funds absolutely love as potential in China. But again, what we're worried about here is the government. That's going to be a common theme among a lot of the stocks. So Futu, kind of like the red, kind of like the Robin Hood of China. I do like this as a long. I think they have a great platform. Even some of our users use their trading platform, and their revenue has been exploding. They're still pretty small on what they could become, so I think Futu is kind of at the point where it's the risk reward is starting to make sense. JD as well, you know, online shopping, really really big player. JD used to be, you know, $108. This one has held up remarkably well among all of the peers that it's had during the most recent crash. You know, this has kind of been consolidating in that 75 zone. If we can get back above that 85, I really think this could go back to 100 and all-time highs. But over 80 first would be your first entry. Play that to 85, and then you could just play the ping pong action up. Li Auto, sometimes referred to as Neo's cousin. This is one that does a lot of electric vehicles like Li. The big three are Li Auto, Neo, and XPEV. Li Auto is considered to have the best fundamentals of all of them, but also all of them are overvalued right now. So everyone's been trying to get in on it early, so it's going to be going through some chop while it shows some growth. So a lot of people are waiting to see the growth before they put more money into it. So again, I don't mind Li Auto among the other ones. Lufax Holdings. This one is interesting because it just tapped the downtrend again and got rejected. You know, these another financial service platform, offers personal wealth and management. So it all depends on government regulations if they crack down on that, if they take that in-house or not. But Lufax is one that might be worth taking a risk on as well, because this is one that I believe is, in terms of fundamentals, yeah, it has an 8 P/E ratio. Growth has been pretty good. Balance sheet has been good. This is one of the ones that I like more than others. Neo, in terms of technical analysis, had a great breakout of the downtrend to falling wedge here, and then looks like it's been retesting this last on Friday. So can see if this can get back over the 36.75 range, 37 range, and then maybe Neo can reverse. Neo, on the other hand, is one that I really like. This is one that I liked when it was at $30. Now it's at $25, so a really good entry on Neo. If you're not familiar with Neo, it is unrelated to Neo, and they make electric vehicles, but electric scooters. So if you've never been to China or Asia, they heavily rely on single transportation vehicles like scooters and bikes, e-bikes, that sort of thing. And this is the biggest manufacturer over there. So this is one where the fundamentals are great, the growth is great. You can see here 4 years ago 100 million revenue, now they're up to 350 million revenue. If you were to look at their financials, their PE ratio is a little high in terms of how much they make, but it's again about the growth and the market share that they can get. Yeah, scooters, like this is one that has a high PE ratio, but that also necessarily isn't a bad thing. You can see on the most recent it made a higher low, so now we're starting to create an uptrend again here. So for me, one to keep an eye on when it breaks out of this downtrend here. It could be explosive if their next earnings is good. NetEase. Online games. Partner with Blizzard, Microsoft, other developers to create online content over in Asia. Again, this is one that's affected by regulation because China's cracking down on kids playing video games. Excuse me. So if that were to lighten, this would be a major player and a very good one to go long on. This is a huge multi-billion-dollar company. It's kind of in line where it should be fairly valued, but if they could continue to show growth and China, China steps back a little bit on those regulations, then this could be one that you want to look into. One of my favorite ones is Pinduoduo. So Pinduoduo, get rid of this right here. You can see broke the downtrend perfectly, and then retested it on this candle and then broke up. Now, in terms of financials, they're a huge company, obviously. They make about 3 to 4 billion a quarter. Balance sheet, 12 bill in the bank. Book share value is pretty good. Very healthy company, cash flow wise. They could have a little bit better profit ratio. They have a negative EPS right now, but they are trending in the right direction. On an annual scale, they went from 2 billion a year all the way to 24 billion a year in terms of assets, and income they went from 258 million all the way up to 8 billion. So extreme growth, one that we should continue to watch. They do the Pinduoduo mobile platform, merchandise, buyer acquisition, etc. So this is one that was just recently $212, now at 96. This is one of the best risk to reward stocks in my opinion. QFIN, this is another risk reward stock that I really like. They're a mortgage lender, subprime lender. Again, the housing crash could be affected by it, so right now there's a lot of fear. So because of that, you can see the price to earnings ratio is 3.9. So there's a lot of fear there's going to be a housing and lending crash in China, which is why people are so afraid to put money into this. But if that turns out to be false, you just found yourself the steal of a lifetime, because this could be a $200, $300 stock. So QFIN, one of those where right now the risk to reward ratio, while there's still risk involved, the reward outweighs the risk in my opinion. So I think this is a really good price point to get into QFIN in my opinion. And you can see revenue has been exploding. It's only a $3 billion company, so still lots of room for growth, considering they brought in, what was it, $2 billion in 2021, and then just last quarter, they're on pace to do $2 billion this year as well. So, in terms of balance sheet, they have net 1.9 billion in assets, so almost their market cap. Sohu. So this is one that's held up really well. It has a very interesting chart in terms of China mainstream stocks. See, it almost has a cut forming. It's gonna make a decision soon here too. You can see this uptrend here. They are an online media search and game search and service company, so they're kind of a web-based company. I have to do a little bit more research on them, but I do really like the chart. So this is one that I'll be watching heavily. I think taking a flyer on it when it gets over 22.75. If it can break through the 25.80 mark, it does have that gap up to 30. It does have that gap up to 44. So in terms of financials, you know, the financials could be better. It does have an 8 PE ratio, so PE wise, you know, smaller market cap, 800 million. Balance sheet, they have 1.15 billion in assets and a market cap of 8.5. So in terms of assets alone, if they were to just sell the company, they would be at a 50% premium. So this is one that, in terms of assets, probably worth taking a flyer on, just looking at the fundamentals there. I mean, to me, that's a $30 stock just by assets alone, regardless of anything else. I think the FUD in China's knocked it down. Imagine getting in at $5 on this. That'd be crazy. That would have been awesome. Trip.com. China, you know, China travel company. Travel's been tough, but people still want to do it, so this is one that, you know, if they could show profitability, probably be, you know, it got beaten down 160 bucks, now cut in half. You can see in 2020, the profits took a Nikes, and they haven't really recovered too much then, but they have been profitable through most of the recent quarters. Price to earnings is a 6. So this is another one, like a lot of these, the price to earnings are so low for what they are. Like, I just think buying some shares or some 2023 leaps, probably worth it in my opinion. I think the risk to reward on a lot of these is there, in terms of the risk outweighing, or the reward outweighing the risk. So I'm going to be loading up a good portion of my long term with this in the next few months. Just going to trying to see which ones are going to behave the best over the next week or two to determine which ones to go with. But I think the risk reward on a lot of these are there. You know, Tiger, another broker, online broker, kind of like Futu. Not quite as profitable as Futu. Neither of them both are that profitable, but balance sheet wise, they have a lot of debt, so that's why this one's a little riskier in terms of that. The upside is there, the chart's there, we'll have to see. But Tencent Music, you know, once a strong growth stock hit 30, 32, now is a $7 stock. So if you like Tencent Music, this would be the price to get in at. So you can see this is the lowest it's ever been. It's below the most recent low of 920. You can see they do make money too, so, you know, 20 PE ratio, so nothing fantastic, but they do have about a 50% upside in my opinion. 12 billion market cap with 8 billion in assets, booked a share value of 4. If mapping Elliott Wave, where would you start? ID Wave 1 on TCOM. So I'd probably go with right here. Something like that. I didn't measure it out, I'm just kind of eyeballing it, but you know, you got a 1, 2, 3 retrace to 1 here, and then a bounce up to 5 and resistance. You know, a lot of these waves, you know, people use, they're like, oh, I wanted a 618 extension, where a lot of it's just, you know, that 618 you'll find that goes right into, you know, a resistance. So, you know, maybe it goes into 37 here. So maybe here, and then this comes back down and tests this support here, and then wave 5 goes right into resistance right here, you know, kind of at the 42 mark. So what that would look like is something like this. Or something like that you would see. The problem I have with this is it's so hard to see the ABC down here. I mean, is the ABC right there? I can kind of see the 1 through 5 up. This looks like the 1 through 5 up right here. And look at this reversal formation that just failed. Eyeball ranges, I know they're the best, right? So, for me, I'm wondering, is this just an ABC down like that? Guys, just want to talk memes all the time. Alright, I got a few left on that. We'll talk some memes. We'll talk about some 1000%ers. Vips, you know, another Chinese online retailer, getting really close to breaking out of this falling wedge. In terms of finances, their assets have been increasing, their revenue's been increasing, 8 PE ratio, most recently 14, about 5.9 in the bank. Typically, if you're looking for an impulse wave, Christina, what you're looking at is for a higher low. So a higher low here. So what you probably have here, actually, if you're looking at this, you might have to go onto the hourly to see these waves a little bit better. I can kind of see them here. So you'd have an A. This is a rule that I have, and I don't think Avery or a lot of other people follow it, but typically each wave should have a different channel. So for me, like, your wave ABC down there, and then impulse wave up would be right here, and then you have your ABC down. If I can get this to go. See, then this is the key here, is there's not really an ABC 1, 2, 3, 4, 5 up here. It's just kind of an ABC up. So that's my question here. So then you kind of got to go into the hourly and look where are the waves. The answer isn't always obvious. Now this one doesn't really have a 3 waves up. So then you're wondering, if that's the case, is this more of 5 waves down, three waves up? Then you're looking, alright, well, what is this that I have here now? So you probably got 1, 2, 3, 4, 5, or you just have 1, 2. Because what you're looking at is a channel. So you got channel down, sideways, channel down, sideways. So you got like a highlighter here. Let's see. So here you got a channel over, a channel over, and then a channel. That's what you're looking for when you're looking for Elliott waves, is you want each wave to be a channel. So each one should have trend lines that correspond. When those break, that wave is over. So here you have a channel, straight trend line up, break, and then you got a clean channel down here. That means you got an ABC down right here because it had a channel break up, down, and then this is a clean channel, so this is still a full wave right here. Where do we end VIPs? See, when you're in a bear like this, you can see you have, if you're looking for a channel, you got obviously a clear channel there, clear channel there, clear channel there, clear channel there. This is a clear channel, a break, and then a clear channel. What I mean by a clear channel is you can connect channel lines. So you can see all of these basically match up. You can see that's a channel. And here you got a clear channel, clear channel. So that's a wave, that's a wave, that's a wave. So you got a channel there. This is a slightly different take that I've adapted compared to a lot of really hardcore Elliott waivers out there. And I don't like just adapting to one style. I think you should use the best of every style, the best of every trading, and develop your own style that works for you. So, you know, this kind of goes along with pivot points and waves and all sorts of things. For me, waves is just price action. Shouldn't necessarily be the end-all, be-all. Weeboo. This is the mother of all rumors, this one. This is one that internally, Weibo, I don't think they trust their government. Because I've been hearing rumors, they've denied them every time, but when there's whispers, there's some truth in my opinion. But there's been rumors that Weibo is going to go private at $90 a share. Now, these are rumors. There's no confirmations or anything out there, but there's been large rumors out there that there's been offers to take Weibo private at $90 billion, or at a $20 billion evaluation, which would be about $90 a share. So about 88 to 92 in that range, depending on the negotiations. So that's kind of why Weibo, even with the China crackdown, has still been gaining this year up until most recently. So this is one where I looked into the options, and the options are still so absurd on it that it's hard to go long on in terms of leaps. But what it's not hard to go long on is buying shares and selling covered calls on the pops. So this is a good covered call long strategy where you could implement the wheel on. So if you wanted to do a China stock where you went long on and you implemented the wheel where you sell calls at the top and then you sell puts at the bottom and you just do that over and over, this would be probably your best bet in terms of a China stock to do that on. Alright, XPEV. XPEV is another giant EV company. I think in terms of sales, XPEV has the highest sales of the three majors that are publicly traded. So, I mean, I guess there's some others, but they're not necessarily publicly traded. So, XPEV is one to keep an eye out on. Now, the problem with all of these companies is they just don't make money. So, at what point do they start making money? You would think eventually, but they do have a good balance sheet in terms of finances. They're okay. They just did a huge $5 billion financing round this year, so pretty sure they're going to be okay for the time being. I like them slightly better than Neo, and they're in line with Li Auto in terms of evaluations. I don't necessarily like them in general. I think they're all overvalued, but the market is huge, so I get it. I just think there's better stocks to go long on. But again, it's not always about the fundamentals. Sometimes it's about the perceived potential and fundamentals. Alright, so yen. This is a 3 times directional bull. So basically, for every dollar China moves in the bullish direction, it moves $3 in that direction. Every dollar it moves in the bearish direction, it moves $3 in the bearish direction. I believe. I gotta look into that, but all I know, this is a leveraged bullish stock. I gotta look exactly how it's done, but if you wanted to go high risk, this would be your play. Options are pretty cheap on it. I think you can get some January 2023's 20 calls really inexpensive. So if you wanted to buy leaps on this, that might be one of the best ways to long China. January 2023 20 calls cost $100. So if you think this has a chance to go back to 32, this could be 1,000% play. It's gonna take probably a year or two to do it. It's not gonna happen overnight, but you know, your break even's gonna be around 21, right around here probably, or no, right around. It's $1.25 average right now. So you'd have your break even would be about right there. So what you're looking for is you're hoping this gets back above here, breaks through all this resistance, and then starts to move after that. So if you think China can pull a turnaround, this is probably the best one to do it on. So YMM, truck and freight carrier. If you've been looking at shipping costs, they've been going through the roof, which is interesting because of all the shipping companies, this one's fundamentals have not been going through the roof. It's like this one fly that keeps bugging the crap out of me. I want to kill it. Haha, I got it. Nice. So I put it on here because it's a huge company. You know, obviously a $17 billion company is worth putting on the list. I don't know if it's something I would really look into more than that, but it does have an interesting chart. You know, it did just kind of break a downtrend retest and bounce. Does have resistance around the 17 area. So might be worth watching. YSG. You know, they have a lot of branded retail products, cosmetics, that sort of thing. Just been getting annihilated. But in terms of penny stocks, you know, this is probably the best penny stock with legitimacy in China. So I put it on the list. Hasn't broken the downtrend yet. It tried recently and got majorly rejected. But one to keep a watch on. You know, obviously a stock that was $25 is now $3. So the upside in terms of buying leaps on is there. In terms of fundamentals, they got cash in the bank. Might be worth taking a flyer on. You know, they haven't been making money recently, so that's a little concerning. They haven't made money since 2019. That's concerning. So they really need to start turning that around. In terms of income, they haven't been making much headway in terms of turning it around lately. So probably wait till their next earnings, see what happens. You know, each earnings they've missed and tanked off of recently really bad. So this would be one I'd probably just wait off and see how their next earnings are. But you know, if they are good and they do show good guidance, could be one to take a flyer on. Joy Inc. Another one that's gotten decimated. You know, recently $150 stock. Don't necessarily make a ton of money. You know, they do social platform, online matchmaking, that kind of thing. So in terms of finances, balance sheet could be better. They do make money. Haven't made money last 3 quarters, and they've been going in the wrong direction. I actually hate the direction. I mean, each quarter they've been accelerating their losses, so a little concerning in that aspect. But if they can turn it around again, might be worth taking a look at. Alright, that's China for you. If you want the watch list, I believe I dropped it in Premium Ideas the other night. Yes, I did. So if you're a member, you can get this watch list. Alright. So let's look at a couple. I think a lot of people were questioning Prog, P-R-O-G recently. Probably because of the short squeeze. I know I said I have it on watch. I mean, in terms of consolidation, it's just consolidating. There's nothing really to talk about right now. You know, I had that pop to 220. Got right up in there. Really nice pop we had there. You know, we took it from $1 to 220. Really nice run there. Let's check out the short information and see where we're at on that. Just give me a second, I'm pulling this data. So here's the Prague short data. You know, 98.84% shorted, really good. 51.45% short interest. We have seen some minor shorts covering. Still decent cost to borrow, so this is an annual average. So about 116%. So about every 3 days they get charged 1% for holding it. You know, if they expect this to drop 50%, it's no big deal for them, but every day it holds, it costs a little bit more, you know, and that's one of those things where at what point do shorts try to cover? Now what we really need to look at is, do shorts need to cover? Let me look at something here. And what you need to do is you need to look at average days on loan, which is average days on loan is 11.15. So if we look at the daily, we could count back about 12 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So that means the average loan is in the $90 to $1 range. So that means most of the loans on average originated in here. Doesn't mean they all did. It just means what happened is some of them probably are in here and some of them are probably in here. So the average kind of falls in here. So your average on loan is probably more in the 1.7 range. You probably got a bunch here, probably a bunch here. And you can look at that by the number of loans. So you can see the number of loans prior to was about 156. So right in this range we had about 156. And then now we have 371. So 156 here loans, and you have 371, I believe 370, 365 on loan here to the present day. So also interesting to note is at the low here, right here, we had 67 people were shorting it, or 67 total loans. And that's only gone up and hasn't gone down. So it's only gone up since this goes up. So people have been shorting it on the way up the whole time. So that's interesting. Louis, what's your handle? Look in premium ideas. I just tagged it. Financials, it's just on the right here. Yeah, it's just on the watch list tab, watch list and details. That's all I got. And then it's underneath more financials right here. Affirm. Yeah, we can go through Affirm, but Prog is interesting. You know, you have a decreasing volume, you have increasing shorting. In terms of financials, there's a really big reason why it's being shorted is they don't make money and they lose a fuck ton of money. So they also have an enormous amount of debt that they cannot cover, and they haven't been able to raise money to cover it. So Prog is an extremely risky investment and only worth trying to play a possible short squeeze for a day or two, and in no terms should you ever long it. Fundamentally, it is a failing company, and most likely, unless they come out with some sort of radical cure for cancer or something that's going to change the medical field, this company will eventually probably go out of business. Yeah, I know a lot of people. Smile Direct has been trending, super popular on social media and on FinTwit. So definitely worth talking about. I think it's been trying to break out. It did make a higher low here, which is one of the first things it's done since the beginning of the year. You know, they do have good contracts and things out there. My only concern with Smile Direct is they just can't seem to make money. Like, what's their path to profitability? Are they solely hoping that someone buys them? So, oops, let me do that. I do know it's a very popular short squeeze stock, and I have even myself played it and made money on it recently. So, in terms of short squeeze info, the short squeeze info is good. I mean, it's got a good chance. Broke downtrend. Needs to get over that 750 range. You know, it's got 44%, 100% utilization, 37% cost to borrow. You know, if we look at the average days on loan, let me pull that up here. Average days on loan is 44. And in terms of number of loans, has exploded up to 984. So in terms of amount of people shorting it, it's never been, I think this is a record for amount of people shorting it. So if you want to see what I'm looking at, I use Ortex for this. I've had issues with Ortex, but overall I've been pretty happy with them. This is what I'm looking at for present day. Let's see if you can see this. So this is kind of what their platform looks like. You know, they have average days on loan, days to cover, number of loans 1,016. You can see it's gone up. It's the highest it's ever been. Average days on loan has actually gone down, which is because people have been shorting it. So if we were to go back 44 days, you know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it's about like here. But I'm guessing what happened was you probably have a bunch in this area, and some more right here, and some more right here, which makes the average around right here. So they probably started shorting it right down here, and they shorted it down here. So you have your big shorts here, and then your new shorts here. So the average between that is between the 7 and 660 range, which is why every time it hits that 750 range in this area, you see the giant short squeeze, the giant short attacks. Just every time it gets back to their average, they short it down more. So once it gets over $7.50, $8, that's when you're gonna start seeing a real squeeze happen. So you need to get over this green box, and then you're gonna start seeing a squeeze. Until then, it's just kind of guessing. So yeah, I actually did look at XLF late recently, Andrew. I actually think I have it charted. Yeah. So, oops. XLF kind of has this rising channel here, this rising wedge, if you will, almost. So that's the only thing that worries me, is it's a rising wedge. It's not a flat ascending triangle, and typically that can be bearish, but sometimes we get to break out to the top. So in terms of like channels, you know, what you're looking at here is probably a ABC down. You see, 3, 4, 5. So this is the part where I'm wondering, since it's held this area right here, the earnings this week are going to determine if this is going to be a new bull trend, because one would expect this to be something like this based on the count. So probably go back and count this all the way down. I love counting on the daily, by the way. Makes it a little easier in my opinion. I think some people still struggle with it, but for me, I don't mind it. Sometimes you gotta go real micro when you get these small waves, though. I don't love that. I like the big waves, the easy to see waves. interesting. Come on. I don't know if you guys like me watching me count, but I enjoy it, and that's what matters, right? Yeah, I mean, the count matches up. I think. So that would be... I mean... it's possible. Let's see. We'll see what happens. I'm bullish on banks overall. Banks look really interesting. I was talking about banks a little bit earlier, or yesterday in the Discord. You know, Wells Fargo's got this kind of inverse head and shoulders, and you'll see this kind of among a lot of banks. Either that or they have downtrend breaks. You kind of have, you know, Citibank. What was the one? RSLS by, I think, Gosu wanted. Reshaped Life Science. Recently had squeezed the 32. Assuming there's a story behind this. Do you want me to tell me what this is, Gosu? Why you want me to look at this? I don't see any reason other than maybe they have a drug in the pipeline, imagine. I mean, I'm assuming because it broke a downtrend, possibly. That's why you want me to look at it. But I mean, it did that. Did that a while ago, and still, there's zero reason for me to look at this other than I looked at the short interest. It's 4%, so I don't see a short squeeze there. The only thing I can think of is maybe they have some sort of drug in the pipeline. CLNE. Clean Energy Fuels. I think this was a short squeeze stock. I've definitely looked at this before. No, if it was, it isn't anymore. 7% short interest. Not a lot of fuel there, so what you're going to be looking at here is fundamentals and growth. In terms of growth, assets has been improving. Book value is okay. Looks like a lot of their assets have come through fundraising, though. And they definitely don't make money, and they're going in the wrong direction of money. Guys, just loving the meme stocks. Alright. So, let's talk about some rules before I go into some requests here, and I will go into some for you guys. I've been going through a couple here. What garbage looking stock. If you long this, you're going to lose money. This thing's going back to 50 cents. Carbon capture. Yeah, well, you know, it just broke the it tried to retest the uptrend and got rejected hardcore. This thing is going right back to 30 cents. I could be 100% wrong like this. 100% wrong. But the chart's clear as day that it's probably done with, and people are gonna, if it doesn't pop Monday, so you know what you want to see is a pop up to 290, a retest of probably 250, and then there. If it doesn't do that, it's doing the green arrow. In general, this had its run. Stay away. You're just chasing something that already had its moment. So, I want to talk about, I think a lot of people here probably want to know, So how to find 1000% play, right? This is probably one thing that people look at and they're like, how to, or that's 100% play. Hold on. People want 1000%. Time. Time is how you find it. So it goes both. My cat literally just whipped its tail at my keyboard and messed this up. Alright. So time is the most important factor. And it goes both ways. So you either want to get yourself you either want to time a perfect weekly move with a far out of the money contract called a Faggy D, a Faggy Delight, FD, which is the most risky way to make 1000%. It's usually 1000% or 0. So let's add that in here. There are ways to get 1000% plays, but you usually need more time then, and you need patience. So if you're looking for the get rich quick scheme, you need to risk it all. And the only way to do that I've found is finding the most high probability setups. So in terms of falling wedges, so falling wedges, you can see these giant pops sometimes. So I pulled up Vuzi here just because I remember when I was charting this week and this thing looked like a gorgeous falling wedge, right? So you got this falling wedge. Typically what you'd want to see is a pivot zone that's above where the falling wedge is, so you can get a nice pop to time that. So what you're looking for is timing that pop out of the wedge into the resistance zone and then buying a call somewhere close to that. And so like Vuzi, you know, if you're trying to play that to 1150, you want to find a low IV stock in a falling wedge format that has a far enough away resistance zone that you can capture a nice move. So if you were to look at Vuzi in particular, October 15th 10 calls are about 30%. Or 30 cents. So if this were to pop out of this falling wedge and did make this nice move, you'd be looking at about maybe $1.50, so about a 500% play. Not quite what we're looking for there, but we're heading in the right direction. So in terms of TME, you know, if this does run back up to $9.75, $10. We were talking about this had the 50% upside. You know, if we were looking at this stock, TME, would this make sense? I think TME actually does make sense in this aspect for a potential 1000% play. So here's the deal. So the $8 calls are 14 cents right now. So if this does run to 950, that's 1000% play. So this is a potential 1000% play that I just gave you. Now it's run there in 2 days in the past. So look at this. It went from 730 to 930, $2 in 2 days. So this is one to definitely keep on watch, because this is one that could easily do it. QFIN, another one where your resistance level is right around $26. It's at 21 right now. So you can say, all right, if it's 26 that's going to hit this week, is there enough meat on the bone if I wanted to get, say, 24, 23 calls? Looks like the 25 calls, the 2250 calls are probably going to be the ones you want. Those are going for about 45 cents right now. So to get 1,000%, you need to hit it about 26, 27. So QFIN is up there. Definitely one to keep a watch on. This is why, like, China right now, in my opinion, has the best potential for 1,000%ers, because they're so beat down. The dead cat, even if it's a dead cat bounce, should be decent enough for us to make some decent money off of. So if you were to look at like Pinduoduo, for instance, you know, the $100 call for this Friday is about $1.35. So you would need that to get to about 115 to make that 1,000%. Possible, maybe unlikely, but you know, if you get that on open tomorrow and it runs 105, 110 by Wednesday, you don't necessarily need it to hit it there. You just need it to do it sooner than later. Because if it doesn't do it right away, then you're going to get theta chopped and everything else. So that is the risky way to do it. There's also the way to do it with leaps and leap spreads. So, for instance, Baba we've talked about this for probably a few times. I said if it hit 150 to put your house on it, you know, it hit 130, 138, 43, and bounced to 162. So even if you were to do it when it hit 150, you'd already be up with your house money quite significantly. And I think, you know, we have increased buying here. We got 4 green days in a row. That's the most we've had since this bounce right here, but this is straight vertical. This is a separation reversal gap here as well. So I think this has a strong chance to go to 180. So if we were to pull Baba up and we say we wanted to look at some leaps on this, so we say January 2023, what would make sense that we could get that 1,000% on it, right? So with leaps, in order to get 1,000%, you either need to find something cheap with high growth out of the money, or in terms of Baba, you would probably need a spread. So if you were to get like a $10 spread, it would have to cost about $1.90 in that range. $20 would have to cost about $2, etc. So if you're looking at this, I'm just trying to find a spread here that makes sense. So a 240, 250 spread for 2023 is about $1, and that way if it did hit the 250 mark, that would be fully in the money, and that would get you about 1,000%. It's interesting if you wanted to find something like just a naked leap on Baba isn't going to get you 1,000% unless you go probably with something like in the 300 range, and then you're looking for one of these giant bull runs to occur, which is unlikely to happen in what I have seen. I think the 200 to 250 range is reasonable, but again, what I'm more talking about is what you're looking for in terms of trying to make 1,000% on a leap. When I get into a leap, that is what my upside I'm looking for is 1,000%. If I'm going to hold something for a year, I want the upside to be 500 to 1,000%, and if it gets me 30 to 100, 30% or more, that's a successful leap. Anything that doubles the returns of the normal stock market hedge funds, to me, is a successful investment. Anything that matches or doubles. So Eric, what I'm talking about is, let's say, so here, hold on, let me pull up the option change for you on Baba. I'm just going to use Webull because I like how it does it. So here is the option chain on BABA for January 2023. So I was looking at like the 250, 260s here. So you're looking at 850 to about 730, or you could even do like the, some of these spreads are so ridiculous. So let's say 850 to 300, you're looking at 390 to 850. So that's a $5, about $500 for that spread, and you can max that spread out at about 5,000. So just shy of 1,000%. That's a nice spread. So anything over 250, you're probably going to make money. And if it ends the next year over 300, you just made 1,000%. Those are nice spreads. Leap spreads are nice. They cap your gains, but they also minimize your investment, which is what you're looking for. Is if you're looking for a high risk growth stock, some of these far out of the money spreads can be quite advantageous, because let's say this drops more, you can then buy back the sell leg and then resell it when you think it's going to reverse. So on the drop, you can buy it back, and then on a big pop, you can resell it. And your underlying position is the 250 call, but the 30 is your wheel. So you sell it on drops, and then you buy it back, or you buy it back on drops, and then you sell it on pops. Now, you got to use TA to determine what your best way to do that is, but it is a way to do it. So I don't know if that, Eric, if that helped your question or not, but I hope it did. So those are some ways that I look for 1,000%. So I'm looking for those high TA setups that match market sentiment, that also match direction and possible reversals. You're only going to find them on major reversals, possibly. And that's one of the reasons I actually originally made Fortuna and Super Fortuna, is trying to use an algorithm that'll determine it for me when I have the most upside to gain. And now sometimes it's only 10 to 20% gains. Sometimes you get those 600 to 1,000% gains. It's always different. You never know what it's going to be, because market news, market sentiment can come out. All right. Haksung. Why am I looking at this? Because it looks awful. Solar energy. All right. I like solar energy. Solar energy looks good. I don't mind actually talking about it. I just don't know. There's no data on this. Like, assets liabilities is okay. They have no revenue though. What's the deal with this? Is this a SPAC? It looks like a SPAC. I'm assuming this was, yeah, this had to have been a SPAC. Looks like they probably merged mid-August and went through 5 waves up. 1, 2, 3, 4, 5. 1, 2, 3 down. So maybe this has a nice gap here, and you're thinking, all right, this is going to play a nice gap here. You're making me do research on this because you're too slow. Looks like it's an overseas Indian solar project plan stock. Interesting. Don't know much about it. Can't really talk about it because I don't know much about it. I can, however, tell you if it's shorted, so I'll do that at least. Hey, look at that. I was right. Can always tell if it's a SPAC because it always stays at $10 for a long time. No short interest on it yet, so I don't know much about that either. Yeah, I saw it had a 250 megawatt solar project plant in India in, what was this, Rajasthan? I don't know really what to tell you. I apologize, I can't tell you more, but in terms of solar companies, one that does look really interesting is DQ Energy. And the reason is it just broke a huge downtrend. It just retested it and bounced into close on Friday. It's okay, Hawk. You're good. Anyways, I do like solar though. A lot of the solar stocks look very interesting. I do think there's going to be a run on them soon. You know, you can see SunPower's been holding this 20 mark like hell and fury, but it has not been able to break this downtrend. So I've been watching solar stocks very strongly recently. First Solar looks very interesting. Knee, very interesting. A lot of these. So Sunrun has been getting annihilated, and a lot of these have just been stuck in these downtrends for so long. Just been curious to see what they're gonna do, but I mean, a lot of us think solar is the future. The problem is they need to get it to be a little bit more profitable, and they need to get probably a 30 to 50% improvement in efficiency in solar cells. I think there's going to be a major breakthrough in the future on it. I'm just curious what that's going to be. Maybe it's something we should start our own company and figure it out. Who knows? But alright, everyone, I've been going a little longer than I normally do tonight. Hopefully I answered all your questions. Hopefully I helped you kind of have a game plan for the week. I think China is one of those where if you're a long-term investor, you're not afraid of a little risk. I think right now is a really good risk-to-reward entry zone. I wouldn't say go all in, but you could start building a portfolio of China right now. And then you can always add if it gets down a little bit, or if it confirms, you can add a little bit more as it confirms as well. So thank you. Oh, I didn't do a firm. I apologize. I'll do that. And that'll be the last one. Alright, affirm. Clean double top here. Expect this to pull back a little bit. Could be completely wrong, but you know, made this full cup here. I would like to see this kind of do some consolidation area. You know, maybe something like this. And then maybe we could do something like that, but affirm, you can just see this insane volume. So what happened here is right there, news came out that Amazon and Affirm were partnering, and Affirm was going to be Amazon's basically way of lending. So it's been going on an epic bull run ever since, but you know, it did 1, 2, 3, 4, 5 waves up. So I anticipate this to be a corrective or flat wave now. If you want to continue to talk with me, I'll be in the Discord all week and all night. If you're not in the Discord, highly recommend it, obviously, since I run it. So hope you guys all have a wonderful evening.